One thing I do on this channel is to teach people like you how to invest and make money from the stock market. However, there are categories of people that should not consider investing in the stock market. And in today's video, I'm going to be sharing with you 5 categories of people that should not consider investing in the stock market. So you want to do well to watch this video to the end to find out if you fall within any of these 5 categories. Hello, welcome and welcome back to the channel. Just in case you are seeing my face for the first time, my name is John Agbo, and what I do right here on this channel is to teach people like you how to make, manage and multiply their money. So if content like this interests you, that you want to become a part of our family here, just click on this button and subscribe. Then turn on the bell icon, which is most important, so that anytime I drop a new video here, YouTube will always send you a notification. Investing in stocks is very good. However, there are categories of people that should not be investing in stocks. And in this video, I'm going to break down 5 sets of persons that should not be investing in stocks. So number 1 are those who are in a survival mode. If you're in a survival mode, you shouldn't be considering investing in stocks. When we are talking about survival mode, I mean, if paying rent is a struggle, transportation to and from work is a challenge, paying your children's school fees is a very big challenge. If you're in that situation, it means that you're in survival mode. Right now, you should not be thinking about investing in stocks. What you should be thinking about is how to increase your income. Right now, stocks investment is not for you. The second set of people that should not be investing in stocks are those who do not have a stable source of income. Sometimes people reach out to me and they tell me that, oh, they want to invest in stocks so they can start making money because they don't have any stable income source. And my response will always be, stocks investment is not what you need right now. See, the thing is, stocks investment is not meant to make you money. Stocks investment is meant to help you grow the money that you are already making. So you don't invest in stocks to make money. You invest in stocks to grow the money you're already making. So if you don't have a stable income source right now, don't consider investing in stocks. And one thing about stocks investment is that you need to be investing consistently because it is not a one-off thing. It is not something you invest maybe 5,000 naira today, then you go and sit back and fold your hands and you're expecting to make millions. It doesn't work like that. Even when we tell you that you can start investing with as little as 5,000 naira, it doesn't mean that you are going to get rich on that 5,000 naira investment. The main reason why we are asking you to start investing with 5,000 naira is to build the habit of investing. But if you want to see any substantial returns, it means that you must be investing consistently for the long term. Because when it comes to anything investment, the more money you invest, the more returns you are going to get. So if you don't have a stable income source, whether it's a job or whether it's a business that is bringing you money consistently, please and please don't consider investing in stocks. Go and get a job first, or you go and learn a high income skill that will be fetching you money on a regular basis. Only then will you now start considering investing in the stock market. And the third set of people that should not be investing in stocks are those who are in debt. If you are owing people money, whether it's an individual, whether it's a cooperative, whether it's a loan app, don't consider investing in stocks. You can't be owing people and you're talking about investment. You should find a way to sort out all the debts that you're owing so that you can be free. When you are free, then it's not easy for you to invest with peace of mind. The fourth category of people that should not be investing in stocks are those who do not have an emergency fund. If you don't have an emergency fund that will take care of your living expenses for the next 3 to 6 months, please don't consider investing in stocks. And I'll tell you why. When you invest in stocks without having an emergency fund, anytime you have any little financial challenge, the next thing you'll be thinking about is how to sell off your stocks so you can pull out your money to sort your emergency. And stocks investment is something you have to do for the long term. So you don't have to be keeping your eyes in your brokerage account looking for how to sell off your stocks at every little financial challenge. So if you have an emergency fund, anytime you have an emergency, you can easily go there, remove your money and then sort out your emergency. But if you don't have an emergency fund and you're investing in stocks, anytime you have an emergency, the first place you'll be thinking about is your brokerage account. You'll be thinking about how you can sell off your stocks to solve your problems. I know this because I've had a couple of persons reach out to me telling me that they want to sell off their stocks and then solve their personal problems. That shouldn't be you. So before you start investing in stocks, make sure you have an emergency fund. This emergency fund does not have to be in your regular bank account. You can put it in a money market mutual fund, or you can put it in a high yield savings account. because there you can earn some interest, all right? And then finally, if you need money urgently, stocks investment is not for you. Stocks investment is not a get-rich-quick scheme. Stocks investment will not make you rich overnight. Stocks investment is not gambling, neither is it sporty bet, where you just put in 100,000 naira and then you're expecting to make 1 million naira overnight. It doesn't work like that in the stock market. If you're going to invest in stocks, you should plan to do it for the long term. If you are investing in any company, plan to buy and hold the shares of that company for at least the next 1 to 5 years. That is the only way that you can stay profitable in the stock market. And why this is important is because there are good stocks that the price might be fluctuating in the beginning. Maybe you might invest 500,000 naira in a particular stock, and then you come back 2 weeks later to realize that your 500,000 naira has now reduced to 450,000 naira. But if you're not investing for the long term, you'll begin to panic. You start feeling like you've lost money. No, you didn't lose money. The only reason why you lose money is when you decide to go ahead and then sell your stocks at a loss. All right. But if you leave that particular stock for a while, maybe in the next 6 months, the next 9 months, the next 1 year or 2 years, the price of that stock will still go up, and it will help you to make more profits. All right. So this will actually make you not to panic sell when prices go down. That is why investing in stocks for the long term is highly, highly important. So if you fall within any of the categories or persons that I've mentioned in this video, stocks investment is not something that you should dabble into right now. If you're actually serious about investing and making money from the stock market, I have a free stocks investment masterclass that shows you exactly how to go about that. In this masterclass, I'll teach you exactly how to get started with investing in the stock market. The link to join the class will be down there in the video description. So click on that link so that you can access the free training. I want to believe that this information was helpful to you. If it did, do well to like this video and share it so that more persons can also benefit from it. I'll see you in the next one.